right. Welcome, everybody. Thank you so much for joining. I know we've got some people jumping on here. We'll get started here in just a quick minute. People are jumping on. Great. Well, welcome, everyone. Thank you so much for joining us on funding growth in high-risk industries, especially cannabis. We're going to be talking about lending solutions today and taking all of your questions on what lending solutions we might have. My name is Kyle Porter. I'm with Operational Security Solutions, or OSS. I'm going to be hosting today's session. As I mentioned, we're going to be focused on one of that kind of challenging areas in the cannabis and high-risk industry space, access to capital. So we're going to be going through different types of funding solutions. We've got the experts here to answer all the questions. If you have any questions, please drop them in. Happy to address them. As a reminder, we can't provide like financial advice or anything like that. Definitely speak with your financial advisor or your lawyers for that. But we're here to kind of give you some of those options. Of our guests today, we have Mr. Tim Tafouti, Director of Operations for Operational Security Solutions, or OSS, and then Gabe Mendoza, who's a lending specialist with OSS's partner company, J&J Merchant Services. Together, we're going to kind of walk through some of these funding things. So with that, I know I kind of just gave an intro, but if we could just introduce our panelists, Mr. Tim, give us a little background on yourself and OSS, if you would.
Sure, Kyle. Tim Tafouti, Director of Operations with OSS. I'm one of the co-founders of the company. We've been in business for over 10 years, and we provide full risk management services with a focus on the cannabis industry and armored car services.
Perfection. Mr. Gabe, little intro on
Yeah, hi
yourself.
everybody. Yes, Gabe Mendoza here. I work with J&J Merchant Services, proud partner of OSS. We've been in the merchant processing space for about 20 years. And myself, I've been working with J&J for the last four. I specialize in the high risk industries, i.e., cannabis. We've worked with many dispensaries in the DC, Maryland, and also nationwide. But we today are also going to focus on lending because that is a branch of our services that we offer to merchants.
And that's the perfect transition to get us going here. You know, we all know that working in the cannabis industry and high risk industry is challenging within its own right, whether it's banking, which of course you guys have access, both of you have access to services in that realm, processing, as you mentioned, Gabe. There's a whole myriad of different difficulties in working in the space, but one of them specifically has been in lending. And I've been in the space long enough that I remember 16, 17, 18. Sure, you could get lending from private investors and things like that. And it was a really hot time. I guess just give us a quick overview. Maybe we'll start with you, Tim, and then go to Gabe. What are you hearing out in the space about lending, and why did you partner with J&J here to bring these services to your clients?
Yeah, I will answer that kind of in reverse order.
Hmm.
We partnered with J&J because we found that they have a very deep understanding in the cannabis space. They've been doing this for a long time, and their core values seem to align with ours, and there's great synergy there. They offer outstanding products. Um, Regarding the our customer base, since we've aligned ourselves with J&J in this partnership, we've been reaching out to our customers to kind of see, hey, where's the interest, where's the pulse at? And we found that about 7 out of 10 customers that we talked to found it very difficult to secure lending. And those specific needs that the customers had, I would say about half were looking for some working capital, and then maybe 25% were looking for some equipment loans or a type of line of credit, and then another 25% were looking for funding for expansion and things like that. So there was definitely an express need from our market base and our customers on needing to secure some form of a line of credit or some form of a loan in order to move forward as a business. And they were looking within the next 6 to 12 months, hoping
Yeah,
to secure some form of financing.
that makes sense. I know, again, the cannabis industry is evolving and growing and retracting and M&A and all kinds of things. So I guess this question is to you, Gabe. Why is it so challenging to find funding in the cannabis industry, and how have you guys been able to work around that to bring options here?
Yeah, that's a good question. Really, when we started out, it was more about finding electronic payments, right? That was the main source of what we were doing, which was helping merchants get reliable reporting. Now, as we went forward, then we started building up more relationships with the merchants. Then we kind of got into the lending space because it was an immediate need. Now we are finding that with the cannabis industry, it really depends on state, which also kind of convolutes everything because not everybody wants. If you're a bank in California, maybe you've been lending in the cannabis space. You don't want to deal with somebody that's outside of your market in New Jersey. And so, really, it's a relationship based. We build these relationships with different banks, with different lenders, just so we can get merchants over the line, get them the additional funding they need, and really kind of help them secure, whatever funding they need to grow as a legit business.
That's awesome to hear. And I think that probably a lot of fears of cannabis industries are reaching out, starting that process. What's the criteria? Where are we going to hit? So let's jump into it. What are the basics? Let's start with what are the basic types of financing programs you guys are working with right now for cannabis and high risk businesses?
Yeah, so we do a few programs. We have construction loans, equipment-based lending. We have unsecured loans, term loans of 5 to 7 years, and we also do business lines of credit. Now, the way we approach it is from two different ways. We can either fund a business itself, or we can also fund someone through their personal credit score and debt to income ratio. That becomes important because if you're a startup business or you've been in business for under 2 years or under 6 months, it becomes a little bit harder. So, having different options is really the way to go about it, and we can kind of piece together what makes the most sense for a cannabis business. So, and we can also even leverage partners and existing businesses as well to kind of help get people the funding they need.
Interesting. So it sounds like there's both types, personal base or business base. And what kind of ranges are we talking about in funding? Can small amounts, only large amounts, kind of the whole myriad? What are you seeing that you've been able to get through the finish line here recently?
Yeah, it really depends. We can get up to $5 million. The difference being that that would be for a well-established business. That would be for uh, business with a long, extensive history of in operation, and also the capital to kind of support those loan amounts. But really, that under $500,000 sweet spot is where we're seeing most businesses fall under. Anything from $50,000 to 500. It really just depends.
Yeah, no, that makes sense. I mean, one could dream of 5 million, but that sweet spot of 500,000 is enough to take your business to a next level, and I can appreciate that. And what kinds of like, talk us through the terms that you're seeing. I know everything's dependent on certain factors, but I think that's the biggest question that we get. What are the terms like on some of these lending products?
Yeah, it really depends. Like merchant cash advances, I'll start right at the fast money, right? That's something that was going to cost a bit more, and we're seeing rates of like 1.1 to 1.6. It really just depends on a business's time in business and also, how much money they earn. Now, when it comes to more like term loans, that could be anywhere from 15 to 30% if we were talking about APRs for cannabis businesses.
And what kind of length of term?
We're looking at anywhere from 6 months to 5 years, depending. But I think 2 years is pretty consistent what we're seeing.
That's great. I mean, that's what you kind of hope for, right? And what do you see when you compare that to I know cannabis businesses hate this question when you compare it to traditional industries, but compared to traditional industries, are they kind of on par nowadays as the cannabis industry is more legitimized, or is it you're still going to pay that sin premium?
Yeah, a sin premium. That's a new one. Yeah, that's a. But yeah, I think the cannabis rates have not caught up to traditional businesses. Um, and especially since, like I said at the beginning, the rates differ from state to state because there's still new states that are emerging markets. But we do find that yes, it is going to be it's going to be higher for cannabis industries, but we have seen some very competitive rates when it's, somebody that's been in business for, 5+ years that is doing really good volume and has a good credit score. And has time. That's the other part too. If they have the time to really shop around at rates and have really good documentation, um, those are the ones that they're going to see better rates.
Speaking of that time and documentation, talk us through the process because I've owned a small business. I know, God forbid you put your information out there, they chase you forever, but then you get to the actual application and they say, "Oh, I don't know," or "You need this or that." Talk us through what your process is, upfront, long form, and then getting that funding solidified.
Yeah, I mean, documentation definitely means better rates, and for that, we would need 2 years tax returns, electronic statements, meaning like we see the money going in and out to your bank, and if we have merchant processing statements or cash in transit records, those are big key indicators for an underwriter to see, and then we obviously the formation documents. We want to see that you're a legal business on paper with your state. That goes a long way to getting you to helping us get you better rates. But definitely the financials that is key, and also having a good credit score, especially important if we're looking for good rates.
Gotcha. So your note to MRB and business owners is get your papers together. But do you recommend don't reach out if you don't have that prepared, or could you help them through that kind of process?
We definitely take a consultative approach. We want people to reach out. We want to see what your business looks like on paper. And even if we can't get you agreeable rates now, that doesn't mean we can't work with you to get you better rates in the future. But it's better to know that path forward than to just kind of assume that you're not lendable and wait until you feel that you have the proper documentation or the proper business. No, reach out to us. I mean, soft credit pulls doesn't hurt your overall credit score, and building a plan, I think, is also really important if you're a business that's maybe under 2 years. And the other thing is tax records. That's something I did want to touch on, is that we do want to see tax returns. And I know some businesses will kind of defer and push out and extend and not get those tax returns. Well, you're not doing yourself any favors on the lending space, that's for sure.
I mean, I know that in trying to refinance my home. Let me tell you, I had to do an amendment just to get that done. But so give me because we were talking about this ahead of the webinar, and we were talking about a scenario where, they reached out and you got the paperwork together, and maybe this one lender said no, but you said, okay, well, you mentioned the word shop. I mean, is this something you help with? Is this like you have one lender, one and done? Or is this an area if you think, could you help out no matter what almost?
Yeah, pretty much no matter what. I mean, unless have bad credit, no income, and nobody in your corner helping you, helping vouch for you, then yeah, probably I wouldn't be able to help you out too much. But I'd still talk to you. I'd still do that discovery call, and I'd still kind of give you some background on how to improve and how to get ready to be a good lending candidate. But yeah, really, there's options, and we work with different lending partners for that same reason. If we have somebody that is well qualified, well, great. That should be a pretty easy task. And most likely, if you're well qualified too, we'd also help you get in touch with your bank. Let's start there and then see what that profile looks like. But if you feel like you're not well qualified, well, we have 5 different companies that we work with, and we can also shop those rates around and see what makes the most sense, or see if we can tranche it out and get you a starter loan. And then as we see that payback history, we can then work to a different kind of loan product. We've worked with people that start with an MCA and then get an equipment loan and construction loan after that. So it's good to start somewhere and also to build a history of paying back your loans.
Got it. That's really informative. And I want to remind the audience, please drop your questions in here. I've seen some coming in, but and we'll get to them, or if they make sense, I can get to them. But I'm going to ask you a trick question, Gabe, that might, I don't, maybe there is an answer, maybe there's not. What's like the most popular type of loan that you guys are working on?
Yeah, a little bit of a trick question because it really depends on what one qualifies for. But I think the business lines of credit is an easy good one because it's you know business lines of credit can start with a 0% introductory APR, and and it's easy to qualify for, assuming that there's somebody, you or somebody that's willing to vouch for you has a good credit and a decent debt to credit ratio. And good credit, I mean like a 680 or above, and debt to credit ratio of under 40%.
Interesting. You just taught me on those because I wasn't sure what qualifies as good credit or debt to income. So that's really interesting. And I wanted to ask, and what are most people in your that you're working with, and Tim, feel free to jump in. We're talking about the cannabis industry. We know everything's in flux all the time. People are expanding, that kind of thing. What are you seeing people who are needing this capital for? What are they deploying it? What might one need this type of loan product for?
Yeah, I think really depends, right? Because if you're looking for fast money, that generally means, you know what, I need to buy a new product. I need to restock my shelves, and I need it now because people are ordering on a weekly or monthly basis. So that would be the MCA loans. But if you're looking to expand your business, or you have expanded your licensure and want to get into manufacturing, well, you might need some equipment, and those would be the kind of loan products that you would seek. Um, and I think that's where that line of credit kind of comes in because as long as you're not looking to cover payroll, but you can kind of use that line of credit for a variety of things. But I think yeah, it's case by case. And Tim, I don't mean to take up all the talk time here.
No, yeah, I'm
Yeah, no,
curious, Tim, what you're hearing that people might be looking for these kinds of products for.
yeah, like I was saying earlier, the majority of people are looking for working capital and equipment loans, and then expansion, capital raises for larger. A lot of our customers that have been in business for a number of years are looking to open up new locations or potentially absorbing other enterprises. They're looking for some funding for that. But what we've seen with the customers that have been successful at getting loans is you kind of look at their immediate needs in regards to equipment like smart safes and things like that. Getting some lending towards purchasing those items, and that kind of gets them in the system. It shows a good track record, and it builds that confidence with the lenders to expand from then.
Got it. No, and that's kind of what I thought too, especially as the industry continues to grow and evolve, as we know, which by the way, congratulations, Virginia, I hear is coming online in 2027. I know there was some back and forth on that. So if you haven't seen that, breaking news here. We had a question come in here that I thought was perfect for this timing. Do you need to be profitable, or you mentioned cash flow? They said revenue. Is revenue enough, or do you think that the company needs to be profitable?
I think revenue number one, but that then I would encourage you as a business owner to kind of look at what can you really afford, in terms of paying back, right? Because there is predatory lending out there. Let's tackle that right away. And they're just looking to make sure that you can pay it back, but they don't care if you're going to be able to pay it back and still, run a profitable business. So, I would say, yeah, you want to be profitable and have the revenue. But to lenders, to get a loan, yeah, all we need to see is revenue.
Interesting. Another one I had here is you mentioned states affect loans. How so, and what states are bad? Obviously, that's a little bit direct, but are there, is it more about recreational states versus medical states, or what states are probably best for loan products?
Yeah, I think, time in business, right? Which if you're an emerging market, then like Virginia, we just reached, it's still a lot to be said because we're going to see a lot of people coming in like it's a gold rush, and yes, they're going to want loans, but uh, maybe not all of these businesses are going to be solvent in a year or two. So, that would mean that it's riskier. But if you look at California or Colorado that have been, or Michigan that have been in operation for many years, well, yeah, there's a lot of you can see what businesses are finding success, and you can help. There's more information available to
Historical, yeah.
read. Yeah,
I'm
historical.
assuming that you don't mean to scare people in emerging markets off, but I can see where that makes sense in more established markets and understanding where that market's going to go. Um,
Absolutely.
Another question I had for you that we haven't discussed, and this person's smart to ask, are there any fees that someone should be aware of looking at these types of products?
Generally, no. There is going to be, there's brokerage fees, like in a sense where, like, if someone is securing you a loan, nobody's doing it for free. But it's all case by case. I have even seen some in the private lending, people will take like an upfront fee to go to work, which just makes sense. People want to get compensated for their time, and that, especially when if I'm talking to a business and I haven't seen what you look like on paper, we can do as many discovery calls as possible. But until I actually see the meat and potatoes, that takes time, and then I have to go and talk to different lenders. Now, in the traditional lending space, and even this high risk, like the kind of companies I work with through OSS, yeah, we don't charge any upfront fees. It's only if the loans are successful, but we get paid through the lending services, not from the customer directly.
Good. I think that's yeah, that's what they were looking to find out, right? It was what is I was
Mhm.
thinking is there closing fees, like when it comes to homes and things like that, but it sounds like it's pretty straightforward. Get the funding. Speaking of, what is the normal funding timeline? I'm sure each product's different, but what kind of range can customers expect?
Yeah, well, let's see, like MCA loans that can happen in 48 hours. That's fast, but it's going to be expensive. Then we have the lines of credit that can be done within 2 weeks. Then if we're looking at longer terms and also larger amounts, that those processes can be a bit slow. It really depends. We've seen loans happen in 3 months. We've seen some in 6 months. Length of time, it really depends on the amount and the kind of loan product you're after.
Got it. This person asked, do your loans require collateral?
Not all the time, but it can only help strengthen. And if I will say, if collateral is like personal homes, that doesn't go as far as one would think, because there's a lot of lenders that would rather not see somebody put up their house, because in the worst case scenario, who wants to take away someone's home, like it doesn't make sense. But if there's commercial property, or commercial real estate, yeah, that's great. Or if there's an existing business, let's say we have, you run a successful business at a restaurant, and now you're going into the cannabis space. Well, yeah, using up the restaurant as collateral, will help get you better rates, or help bolster the loan, uh, help bolster your ask, so we can get you that loan amount.
Got it. Interesting. Oh, these are some really good questions here. This person, I'm going to rephrase it because they say, I work at a lot of cash. Well, I'll put it this way. Does how much cash versus card processing affect your approval chances of loans like these?
Absolutely. Absolutely. But it depends on how you're working with your cash. If we need to see documentation, the better the documentation, the better. And if you're dealing with a lot of cash, well, yeah, how are you getting that cash into your bank? We want to see that trail there. And that's, you know, here's the plug. Use a
I was
cash in transit company.
I was
Like
going to
like
say,
like this gentleman on the call, Mr. Tim.
let me tee you up for that one, Tim. What could a company do who works in a lot of cash to prepare, say they wanted to apply for a loan or a financial product? How would a company like yours or solutions like yours help with that?
Yeah, so I mean, if we're providing that cash pickup services and those deposit activity, I mean, our online portal can give you on-demand reporting. So if we've been providing you service, let's say for the last couple years, you can easily go on there and know and download reports of exactly every to the penny deposit that you made into your bank regarding the cash. So compiling those type of reports and that documentation as a supplemental for a credit application is pretty straightforward.
Got it. And that's with any loan product, right? They just want to, these underwriters want to see what's happening behind the scenes. They want to see what's happening in the financials. And especially when it comes to cash, you can't just say on a balance sheet, well, I've got 110,000 in cash. Okay, but how is that flowing in? How is that flowing out? That makes total sense. Um, this person asks, are cultivators, dispensaries, and manufacturers treated differently I'm assuming when it comes to lending products. And I own multiple. Should I do one or the other? That's probably to you, Gabe.
Yeah, I think so. Yes, but it really depends on, how much revenue we're talking about and length of business. I mean, I would say with retail shops, for example, there's a lot more money going in and out, right? And so that creates a history. But I just stress it's all about documentation. If you keep good proper documents, if you're a cultivator or manufacturer, will be able to get good rates. But if you only see like a one transaction every month or two transactions, then yeah, it becomes hard to predict what kind of revenue we can forecast. And especially when it comes to, cultivators that may have people that buy heavy, let's say for April, right? You have 420 coming up. And so you might see a large amount of ordering done, whereas in off-peak times, like maybe in the winter, you would see less money going in and infrequently. Um,
I was going to ask that about seasonality. Does it make sense to do it to apply in your high season, or no? You're saying that you're requesting tax returns, so it really would be a year-over-year basis.
Yeah, year over year, but also if you're seasonal, like if we just wanted to explore and get rates and we're looking for, 4 months of banking, well, if you're seasonal and we're on off-peak times, well, maybe you just want to go ahead and, well, let me know you're seasonal. And then I said, you know what, instead of 4 months, let's get 6 months or 8 months so we can tie into where your high season traffic was, even if because we're looking at an overall profile and we want to get a kind of a daily average. Um, so yeah, I would say more information the better.
No, that's really good, and that I think that points to why it's exciting or positive to work with a consultative style group like yours, where it's like, okay, let's work through this, and then we'll take it to the right people once we understand your business a little bit more. I wanted to ask if you had any success stories. I mean, we didn't even talk about this ahead of the preparation. Can you think into your recent memory of, somebody who was looking for something, what kind of terms or what kind of loan it was and what the process was like? Just any recent success stories you can share?
Yeah, the most recent one was a merchant cash advance, $65,000. The rate was a 1.6. Oh no, pardon me, 1.4. And they were able to get funded it ended up being 72 hours, but they were able to get that money fast. And it is a cannabis dispensary, just so where everybody's on board. And they've had 2 years of operational history.
Awesome. Awesome. Wanted to ask anyone else in the audience have any other questions before we wrap this? Mr. Tim, anything you'd like to share as well while we wait on any more questions here?
Yeah, I just one point to add, from a armor carrier perspective and a lending perspective, I mean, we're all part of a team, and our job is to support the enterprises. So as long as, we look at things that way, we're here to support the customer, and we'll do that in any way that we can.
Awesome. I appreciate that. Mr. Gabe, is there anything that we left out in talking about these lending solutions, things you get asked all the time? We'd love to hear it.
Well, more as summing up my this webinar, it's worth having a conversation. I mean, everybody's different, and that's the big thing. I don't want to I don't want to pigeonhole people into thinking there's only one way to get lending done. No, it can be very creative, and so we want to have those conversations with you. We really like to get to know your business and also help you on how to build up the business. Again, we're merchant service providers, and so that means we're talking about we can help you get set up with electronic payments. We can help you set up with point of sales. We can help make relationships with banks that just make your business look better on paper. And so really we're here to help and would love to start a conversation.
I appreciate that. And I appreciate our audience joining us today and our panelists to talk through it. Of course, reach out to OSS or J&J Merchant Solutions. We'd love to connect you on all types of lending products, specializing, obviously, OSS specializing in compliance, CIT. J&J Merchant Services have all kinds of products, whether it's processing, point of sale systems, etc., and obviously our lending products. So thank you, gentlemen, for joining us today, and thank you to our audience. And we look forward to working with you on your next lending project.